Hi everybody, welcome back to the channel. Today we're talking about IQST stock. This is a company that I've talked about on the channel before, and this company is already doing over $100 million in revenue. Now, I currently don't have a position in this stock. That being said, I am considering adding a position, and I wanted to share this stock with you guys. Now, if you're in the Patreon, you guys already know about this one. There's a couple of you guys in there, I think, so far. But basically what I do on the Patreon is I talk about these stocks and kind of give like an in-depth analysis before I actually talk about them on the channel to kind of give you guys a heads up on what I might be discussing. So if you're interested, check out that link in the description below. This is IQST. Now this company's on track to do, they're currently over 100 million in revenue, and they're on track to do over 200 million in revenue by 2025, by the end of this year, actually, if you look at the numbers, and well into next year, they're going to be pushing over $250 million in revenue based upon the projections. And we can take a look at those projections in this video. And so this is a company that is well established and I would argue is very undervalued. Now, if we go back to when we had all the excess liquidity in the market back in 2020, 2021, it was very easy for this thing to push above $1. And in fact, that's exactly what happened. This thing actually hit $2 a share. This chart's not entirely accurate. It actually hit $2 a share intraday. So basically from under 20 cents, under 10 cents even, it would have been a 20x. If you would have bought this in December or even before then, September, you would have had a massive return. Now, this stock just went over 200 million shares outstanding. It was under 200 million shares outstanding for a while. So, not a bad share structure. I mean, with the revenues it's doing, I would argue that this thing could potentially hit $1 or $2 a share, if not more. So at the current price of 26 cents, is it possible for this thing to hit $2.60? That would be a 10x, right? Where would the valuation be, right? Or if we just call it 25 cents, we can think of, $2.50 valuation on this if it already hit $2 in 2021. Now, since 2021, the revenues have gone up substantially. And in fact, here's the chart going back. As you can see, it hit a peak of, if we go all the way to this day right here, you can see the peak was, or the high was $2 on February 22nd, 2021. It opened at $1.48, hit $2 a share. And before then, even just going back to December of 2020, it was trading at 10 cents a share. So that just shows you how quickly these things can change. And really, we've been trading pretty much sideways. I mean, the highest this thing has gotten is like 40 cents in the last several months, even the last year, 2 years, pretty much. This has not been doing a whole lot. Going back to 2022, we've been basically pinned under 40 cents a share. And so with the growing revenues, and this company's continuing to grow revenues, and we're going to look at those numbers here in just a minute, but it kind of gives you an idea of where this company might be headed. Now, if we look at also this right here, so IQST advances global expansion with strategic acquisition agreement to fully consolidate Swisslink carrier AG, enhancing telecom powerhouse vision. So this is some of the most recent news. It goes into this right here, but this is, in terms of the news, I would say this is not the most important. Like right here, NASDAQ uplisting, all this kind of stuff, strategic expansion. That's kind of what I get excited about, especially when they're talking about becoming a 1 billion plus revenue company by 2027. Now, this is a company currently with a market cap of less than 60 million. Okay, so it's less than $60 million market valuation. If you're talking a revenue of over 1 billion, you're potentially talking very undervalued, especially when you look at a metric called the price to sales ratio. So if we look at, for example, the price to sales ratio, all we're doing is taking the market capitalization divided by its total sales revenue over the last 12 months. Now, what I did is I took the annual number for the price to sales ratio. If we look at the revenue it did last year, 144 million. Let me zoom in here and show you. So I basically took, it was 54 million at the time I took this snip right here of the market capitalization. So 54 million divided by 144 million is 0.375 price to sales ratio. Now, what I was reading is that for the price to sales ratio, typically under 1 is going to be, or less than 0.75 is extremely desirable. Okay, so that's what it's saying here. A price to sales ratio of 0.75 to 1.5 are regarded as strong buys. But the risk goes up, or the valuation risk does go up as the price to sales ratio increases. But right now we have a price to sales ratio of less than 0.4. So I mean, we're looking, I would argue, pretty undervalued at the current valuation. Now, keep in mind, this was 2023 numbers, 144 million. In fact, if we come on over to OTC markets, if I can find out where it is, We'll go over that in a minute. Here's the revenue. So this was the last quarter, 54 million. Quarter before that, 78 million. Quarter before that, we have 51 million. If we look at going into the total revenues thus far this year, I had it actually listed. It was well over 100 and I think 70 million so far based upon those 3 quarters. So basically, they're on track. If they do another, let's say 50 million in revenue in the fourth quarter, they'll be well over 230 million dollars in revenue for the entire year. So that's only accelerating. If we look at the annual from 2023, we're at 144 million, as we mentioned. So going over that price to sales ratio currently of less than 0.4. But the price to sales ratio, if the valuation or market cap stays the same, if we assume that now we're doing, even just to be conservative, 220 million, because they've pretty much already done 170 million thus far this year. So they've already surpassed this 144 million. If we assume another 50 million, in fact, here's the number I came up with. 234 million in revenue. If we take that number, let's just divide it by 55 million, or even we'll say 60 million for the market cap. To be say the market valuation goes up a little bit, and we have a $60 million market cap divided by, we'll call it 235 to make it easy, 235 million in revenue. And now your price to sales ratio goes down to 0.25. So now you're talking even more undervalued, in my opinion. So that's where it kind of gets exciting, right? That's what you can look at. And this is based upon, like I said, these 3 quarters right here. If we look at these numbers, you can see that these are actual verifiable numbers that they've done in 2024. And we're also looking at this new, potentially, let's say 50 million in revenue for the fourth quarter. Could be higher, could be lower. Maybe they have a bad quarter, it goes down to 35, 40 million. Maybe a good quarter, 60, 70 million. But regardless, we're talking almost $250 million in revenue. So when they're talking about becoming a $1 billion company or $1 billion in revenue by 2027 in that press release, that might not be totally far-fetched, right? I mean, a lot of companies have very ambitious projections. But, if we look at this press release here, I think this one we just went over here, the $1 billion plus. So it says revenue for the first 9 months, 184 million. Impressive 89% year-over-year increase, 290 million for, that's 290 million. Hey, I mean, already it's well over my very conservative projections of, let's say, 230 million. The telecom division achieved profitability, so that's good. And, if you want to go over this, I'm going over a lot of the numbers. You might be confused about what this company does. I encourage you to look at the company website, do your own due diligence, obviously. Keep in mind, penny stocks are very high risk. You want to try to minimize that risk by looking for opportunities that may be undervalued, such as potentially IQST. But definitely go over, the company, look at it. I'm going over a lot of these numbers here. We have gross profit, all this stuff. All these things seem very positive. If we look at, here's where they're setting the stage here for going into 2025. $340 million in revenue for 2025. That's going to put their price to sales ratio even lower, assuming the valuation doesn't change too much. So that's the main metric I'm kind of looking at in terms of this being very undervalued. Obviously, profitability is going to be important long term. So we want to take a look at that too. But, when I bought Alpine 4 Technologies, or ALP, back in 2020, and it went from under 10 cents to $8 plus per share, they were, I think, doing about 40 to 50 million total revenue, had a share structure of, let's call it 175 million shares outstanding. This one has roughly just over 200 million shares outstanding. If we look at the actual shares outstanding, so at $1 per share, you're talking a $200 million market valuation. You're still talking a price to sales ratio of less than 1 in that case, okay? So you could have argued, ALP, when it went up from under 10 cents, under 5 cents even, when I initially bought it, to $8 a share, I definitely didn't sell at that price, but, it did go to that price. It went to basically a $1 billion market valuation within just a few months of going from under 10 cents a share. With outstanding shares of 203 million, you're talking a $200 million market valuation at $1, at $2 a share, where we traded at previously in 2021, this stock. You're talking a $400 million market cap. Now, if they're on track to do revenue of 350 million or 340 million, a price to sales ratio just a little bit over 1 in that case, assuming the share structure stays the same and everything else, at $2 a share. I mean, that's not totally unrealistic, and that's not totally, I wouldn't even argue overvalued in that case in terms of a price to sales basis. So that's kind of how you can base this valuation. And so if you're looking at this potentially 10xing with the revenues this is expected to continue to do, you can also look at the assets on the books, right? So if you look at balance sheet, how many assets do they have? 15 million. They total current total assets in general, 22 million. They do have total liabilities of 13 million. They have stockholders' equity of 8.4 million. So that's kind of how you can look at it as well. Look at the stockholders' equity. Look at what the current valuation is as well. Are we going to continue to see stockholder equity growth, right? So, do we want more assets than liabilities? Obviously, right? We want to have a good balance sheet. Profitability is another thing I mentioned. So if you look at the income statement, are they making money? Did they make money in 2023? The answer is no. In fact, they lost $763,000. But that's actually not a terrible net loss. It's just a matter, I think, of maybe lowering expenses. As the revenue grows, I'm guessing it's going to be easier for them to maintain profitability. If we go back to 2022, they lost 5.9 million. So that net loss has decreased. 3.8 million net loss in 2021. So we'll see how the 2024 numbers turn out. I am curious if they're going to be profitable or not. If we look back at the quarterly numbers, have they been profitable thus far? In the last few quarters? No, they have not. They have 923,000, $2 million, so right now they're in the negative, right, on their net income. So, you're looking at over a $2 million net loss for the year. So it's just a matter, I think, of time, as they continue to grow their revenues, that we should start to see profitability improve. Let me know what you guys think in the comments down below. Here's a longer term chart of IQST as well. Now, it's funny because I used to talk about this stock on my channel. I used to think this is undervalued, even under like 25 cents. Now, at the time, it was trading above $1, and people thought I was crazy for suggesting that this would go all the way down under 25 cents. Well, in fact, that's exactly what happened. And it's just a matter of, buy low, sell high. I mean, I saw that this had already shot up a lot. It was starting to come back down, so that's typically what happens. But right now, I would argue your opportunity is not bad in terms of where it has traded in the past, in terms of how they're growing revenues and where they've been trading. I mean, we've basically been trading sideways. You can see that it kind of hit these highs here, almost up to 40 cents. But really, I mean, we've kind of been pinned under this level for a long time. So it will be interesting to see how this plays out. I think there is a lot of opportunity long-term with this one. And I think that this is an interesting company. I encourage you to do your research. As you can see, the current market cap is 53 million. Outstanding shares, 203 million. So, can this hit $5 a share? Would that be overvalued? You're talking of basically $1 billion valuation. Alp in 2021, when I bought that one, had a lot less revenue, and they were not profitable. That one, in fact, did hit $1 billion valuation. So that's well over a 10x from the current levels. But why do we trade these stocks? For these types of opportunities? If we can try to find these opportunities before the crowd, right? Kind of like TNXP. TNXP went up very quickly. It came down very quickly. But if you would have bought under, let's say, 20 cents and sold above $1, 5x, right? If you got out, if you bought at 15 cents like where I bought it and got out at $1.50, you lucky ducks, that was a 10x, right? So that's why we talk about these opportunities, because the returns can be insane. And especially for those of you who are patient, right? If you guys are willing to wait this out and wait for that move of 5x or 10x, make sure you're disciplined with your strategy in terms of when you're going to exit, because it's always important to take profits on the way up. But, I mean, this is kind of what the opportunities entail, right? So we have a company that's well over 100 million, 200 million. I could go on. Low price to sales ratio. Here's another confirmation. Price to sales ratio of less than 1 is generally thought to be a better investment, or more undervalued opportunity, since you're paying less for each unit of sales. Going over that price to sales ratio based upon even 235 million. Now, if they're talking 350 million, if you take a $60 million market cap, and take it, I think it was 340 million actually for 2025 revenue they're projecting. Now you're talking a price to sales ratio of less than 20 or 0.20 or 1/5 of 1, right? Which is, I would argue, is, Anyway, you guys get the point. Look over the press releases, guys. Look over the company. I went over a lot of numbers. I didn't really go over like the actual business in this video, but this is kind of what I'm thinking in terms of like what I look for. This stock has sold off a lot from the peak. It's increasing revenue quite dramatically. They're on track to do well over $250 million in revenue. The company is valued at less than 100 million, and in some cases, depending on where it's trading, it's valued under 50 million, despite all these massively growing revenues. So could this thing hit multiple dollars per share? I think that possibility exists. As always, guys, make sure you are researching yourself. Make sure you're not just taking my word for it. Penny stocks are a lot of risk. And there's a lot that can go wrong with penny stocks. You can lose a lot of money. You can make a lot of money. So with opportunity, it also comes a lot of risk. And so always consider that, maybe consider consulting with an investment professional if you feel it's necessary based upon your own risk tolerance and investing goals. But with that being said, guys, check out IQST stock. Let me know what you guys think in the comments down below. And we will see you in the next one. And Happy New Year if we do not talk again. Take care.